All right, welcome back everybody to Altcoin Daily, where of course you subscribe for our daily videos, keeping you informed on everything that goes on with Bitcoin, altcoins, the whole cryptocurrency market. I try and break things down, make it easy to understand, just like in today's video. And I hope this video provides you with a lot of value. That's my goal. This video, it's not meant to incite you to buy. It's not meant to incite you to sell. It's meant to incite you to think. This is a big picture type video. It's educational. And if you actually like when we do videos like this, if you like when we talk big picture and kind of talk, what we can look forward to in the coming months and years based on what happened in the past. If you like videos like this, actually take the time and give this video a like. And let us know in the comments if this is something that you want to continue. Now, let's get into it. Before we talk big picture like this, before we go over exactly what I want to go over, let's just review two pieces of news. We'll get through this rather quickly. So, this is just what we expected. The SEC has postponed the decision on the VanEck SolidX ETF. We went over this in detail in yesterday's video. You can still check that out here if you want a thorough breakdown, but this is just what we expected. And the reasons given were the same reasons as always. It's the market manipulation, the liquidity, the financial crimes, and other issues as reasons for the rejection. Now, this is what you should be looking towards. The VanEck new deadline is August 19th, the summer of this year. And once again, the SEC can and likely will delay one more time for reasons given in yesterday's video. And then the final deadline, where they'll have to say either yes or no, is on October 18th, so the fall of this year. And, just like always, we're going to keep you informed step by step all along the way. Now, this next news story, before we get to the main focus of today's video, this next story is quite a surprise. It's a surprise from JPMorgan, and they're now giving out reports that Bitcoin has intrinsic value. Whoa, Bitcoin has intrinsic value? I thought it was worthless. I thought it had no value. Jamie Dimon, and you can see, this is the history of how JPMorgan has analyzed Bitcoin. In 2017, Jamie Dimon, the CEO, said, "I'm going to fire anybody in seconds if they own or trade Bitcoin." In 2018, last year, he said Bitcoin has no intrinsic value. Now, all of a sudden, in 2019, they're coming out with reports, and actually they say that Bitcoin's intrinsic value is around $4,000. They say Bitcoin's intrinsic value is right around here. And just to give you some details on this story, Bitcoin has intrinsic value, admitted a team of strategists at the major investment bank JPMorgan Chase. Now, they were able to come to this conclusion by analyzing the cost of production, taking into account such information as the estimated computational power, the hardware energy efficiency, and electricity expense. So it is crazy to think that, it's just what we knew all along. That probably JPMorgan is buying Bitcoin as we speak. And at this rate, 2020 comes along, they're going to say Bitcoin's intrinsic value is a higher number. And then probably by 2021, they're going to, once they have their core position, they're going to come out and say, hey, Bitcoin's intrinsic value can actually go a lot higher. Now, I like this quote from Maddie Greenspan, who is a senior market analyst at eToro. Let me just read it to you. He said, "It's wonderful that JPMorgan is finally ready to admit that Bitcoin has intrinsic value. And you know what? It's not at all surprising that they see the current price as overvalued in comparison to their calculations. Yes, Bitcoin is well above the mining cost at current rates. But what JPMorgan has failed to take into account is that frequently, when miners are running a surplus, they will start hoarding coins, and by withholding the supply from the market when times are flush, their aim is to limit liquidity and send prices even higher." That's true, and I like the way this man thinks. So I just wanted to bring those two pieces of news to your attention. Now let's get into the main point of today's video. Guys, I lost sight of the big picture, and if you've been subscribed to our channel before, you know that I was cost averaging very heavily right around this area. I was buying a lot right here, and I was buying a lot right here when Bitcoin was between $3,000 and $4,000. Now, you might remember, I told you in many, many videos I was cost averaging around this time, and a lot of people in our comments, some people were saying I am too, but still many others were creating fear, uncertainty, doubt. They were saying, you're foolish. I'm going to buy much lower. I'm waiting. You're buying too high. Now it turns out I might have been making a smart move. But the mistake I made is that I lost track of the big picture, and I alerted you when Bitcoin jumped to about $5,000. I alerted you I'm stopping cost averaging. I'm going to wait till it comes back down. And that turned out to be rather foolish, at least where we are right now. And I actually FOMO'd in when Bitcoin dipped to about $7,200 the other day. So I thought it was stupid to buy Bitcoin at $5,000, but I ended up buying it at just above $7,000. And I guess the mistake I made is perhaps I should have been cost averaging this whole time. And now, I don't really think it's stupid to buy Bitcoin at $7,200 or $7,800, especially when you consider how fast this market moves and the big picture. So I just want to kind of go over how quickly this market moves with you right here today. Because if you're waiting to buy in at lower prices, listen, I don't know the future. Every market is different. Past performance doesn't necessarily indicate future performance, or however that saying goes. But I do just want to show you how quickly this market moves, starting when Bitcoin bottomed out in 2014, going all the way up into 2017. And once again, guys, if you like videos like this, if you appreciate when we do this, do me a favor, actually take the time and like the video, and let's get into it. Okay, so and once again, this is not meant to incite FOMO, this is just educational. So at the beginning of 2015, when Bitcoin bottomed out, Bitcoin spent 43 weeks trading around between $200 and $300. 43 weeks. Now, around this time, many people thought Bitcoin was going to go lower. The fundamentals weren't as strong as they are today. Now, when Bitcoin finally started to go up, after 43 weeks, Bitcoin spent 7 weeks, and then an additional 5 weeks between the 300 and 400 range. Now, try and imagine yourself back there at this time when Bitcoin rallied up from 200 to 300 to 300 to 400, probably around this time. A lot of people were thinking, I'm going to wait till Bitcoin comes back down again. I'm going to wait to buy at this time. Now, looking back, buying Bitcoin between $300 and $400 would have been a great opportunity, especially if you're cost averaging this whole time. And that's the common theme as we go forward and review this stuff. So we spent 7 plus 5 additional weeks between 300 and 400. After that, we spent 25 weeks between 400 and 500. So again, I bet a lot of people at this time were saying, I'm going to wait till Bitcoin dips back down to 300 to 400. Well, after a certain point in time, Bitcoin never saw that price again. Let's move forward. 9 weeks between $500 to $600. 9 weeks. Then 18 weeks between 600 and 700 range. Many people were probably waiting to get in at a lower price. 7 weeks between $700 and $800 range. 5 weeks between the $800 and $900 range. And, once this passes, we never got that low again. And after a certain point, you can kind of see what's going on. Bitcoin started getting, parabolic. It started getting faster and faster. The market started moving quicker and quicker. And if we jump to the second half of 2017, we spent between $8,000 and $10,000 11 days. 7 days between 10,000 to 12,000, 1 day between 12,000 to 14,000, 1 day between 14,000 and 16,000, and 8 days between 16,000 and 18,000. So I hope that didn't get too repetitive, but now consider the fundamentals that we have today versus 2017. Let me just list a few, and if you have more in the comments, please feel free to share. So since the top of the previous bull market, Bitcoin's hash rate grew 240%. That strengthens the network. The Lightning Network grew from nothing to over 1,000 Bitcoins in it right now. Bitcoin's dominance has grown from 34% to 57%. The Cash App has started selling Bitcoin. Fidelity is now offering Bitcoin custody and trading. There's been plenty of development on Bitcoin or for Bitcoin, such as Multisig, Unchained, Casa, making Bitcoin better and more user-friendly. Besides that, what can we think of? We had that 60-minute piece just the other day. It was surprisingly neutral/positive. We have financial shows and websites, they now cover Bitcoin on a regular basis. Bitcoin is being normalized in society as people all over the world realize that Bitcoin is still here. Next bull run will be even wilder. Now, again, my only point in this is to show you just how quickly this market can move. And, 43 weeks is a lot, 25 weeks is a lot. But just to show you, after a certain point, Bitcoin never gets lower again. And actually, after Bitcoin got past previous all-time highs, that's really when things started to take off. So, one could argue it's actually pretty smart to buy at $8,000. One could argue it's smart to cost average pretty much all the way until Bitcoin gets to all-time highs again. This is assuming that Bitcoin has a strong future, in which I think it does. Maybe you agree. And yeah, that's what I wanted to share with you today. 2019 is a great year to get your long-term Bitcoin positions in. I tweeted this just earlier today. All right, that's it, guys. I will see you tomorrow. It's going to be a great year.